Yeah, RPG, over to you.
Okay, thank you, Vimudi. So, welcome once again. This continuing session on discounts and incentives. So, till now, what we have discussed is the scope of consideration. That what is the scope of consideration? Whether there can be a scope of treating any amount being received by the purchaser as an incentive in case there is a pre-existing purchase and sale contract between the two. In case there is a third party, who would be treated as a third party in case of a contract? Vis-a-vis the definition of consideration that we had discussed, wherein it has the consideration has to be paid either by the recipient or any other person. So, what is the scope of that any other person? Whether that any other person includes the original equipment manufacturer in case he gives any amount to the purchaser, to the distributor. So till now we have discussed all this aspect, and along with that section 15.2 and section 15.3, and there are certain situations that we had that I had framed and we had discussed up till point number 3. We were on situation number 3 in the past session, wherein just trying to go through what we had discussed and concluded. A is a dealer of TML motors. A is offered a discount.
Arpit bhai, sorry, just as a kind of a quick recap. So, situation 1, situation 2, what is your take on the position? बोल के situation 3 पे जाएंगे.
Okay. Okay, Vinji. So situation 1 is offtake discount. A is allowed a discount of 2% at year end on achievement of offtake target for the year by B. In my opinion, and what we had discussed, that in this case, that offtake discount would not be treated as a consideration being received by A from B, because this amount is pertaining to the pre-existing purchase contract or a sale contract between A and B. And we have already discussed in the past session regarding the judgment of Honorable Apex Court, wherein they had said that any amount being paid in relation to a pre-existing contract of a purchase and sale between a purchaser and the seller would not be treated as an incentive, but as a reimbursement of the amount which was already paid by the purchaser to the seller. In situation 2, that is retail target, wherein A is allowed as an incentive of 2% at year end on achievement of retail target for the year by B. Now again, there is a pre-existing contract between A and B. A had paid a purchase price to B earlier, and out of that purchase price, it is treated that B is repaying or reimbursing some amount to A. The quantification of the amount to be paid, that is 2%. In situation 1 was on the basis of offtake discount. In situation 2, it is on the basis of retail target. So it is only the quantification, the mode of quantification which has changed. But ultimately, the amount which is being paid, the nature always remains the same. There is one very interesting judgment which I came across. This is a judgment of judgment by Honorable Bombay High Court, wherein they had said, I am just trying to take that judgment.
Arpit will be joining back. He'll be sharing a moment.
Yes, this is the relevant extract of the judgment. relying upon the principle laid down in the judgment that it is the quality of the payment that is decisive of the character of payment and not the method of payment or its measure and makes it full within capital and revenue. It was held that now this is the concluding part of the judgment by Honorable Bombay High Court. This is in GST regime that if I can correctly remember, it is from Bali Munibai. It was held that the quality of the payment and not the method used to determine its measure and determines its character, namely whether it is consideration or damages. So it is quality of the payment, not the method which is used to determine whether an amount is received is in the nature of consideration or a damage or in any other of any other mode. Although the measure for quantifying a payment of royalty to the court receiver may be determined by looking at the consideration payable under a contract or arising out of business relationship, the royalty may still be under the nature of payment towards a potential award or damages and therefore not liable to attract GST. So in this judgment, and putting the situation which we had discussed regarding the quantification, whether it is on the retail target or an offtake target, the critical point to decide whether it is a consideration or any other amount is the character, not the mode of determination. What happens is that generally department says that, see, we will treat the off discount as a discount and not an incentive. But since the retail target is being given on a retail, on the sales basis, therefore it would be treated as an incentive. So what they are doing, they are going on to the quantification part, that how the amount is being quantified. And since the amount is being quantified on the sales, they are treating it as incentive. But in case it is on purchase, they are allowing it as a discount. Now this judgment clearly lays down that the quantification is relevant. It is the quality of the payment which determines the actual nature of the amount being received. So for situation 1 and 2, even though the quantification is different, but the nature, in my opinion, remains the same. Situation 3 is a deal.
RPG, at the end, you may please share the citation of this Bombay High Court judgment, please.
Yes, definitely.
Thank you.
See, Gurji, and this judgment is a very important judgment because although it is not specifically on between a assessing officer and assessee, it was in a PIL, which was it was a writ petition which was filed on a separate issue. But since the GST part was there, so it discusses section 7 in a very detailed manner. So I would share the citation. In situation 3, A is a dealer of TML Motors. A is offered a discount of 15,000 to be passed on its customer, out of which rupees 5,000 is to be borne by A, and balance 10,000 will be reimbursed by TML Motors. Now, in this case, supposedly there is a vehicle of 5 lakh rupees. TML Motors asked A to sell the vehicle at 4,85,000 rupees to the customer. Out of that 15,000, 10,000 is being reimbursed by TML Motors to A. The question comes that whether this 10,000 would be treated as a consideration, again going by the same principle, that this is nothing but a reimbursement of the earlier amount paid, because the underlying concept is the purchase and sale contract between the original equipment manufacturer and the distributor. Therefore, 10,000 should not be treated as a consideration. And secondly, the definition of the consideration provides that it has to be paid either by the recipient or a third party. And going by the GST Council agenda, on the basis of which the circular number 105 of 28 June 2019 was withdrawn, this was the specific point of contention that this 10,000 is not being paid by the third party. It is being paid by the original equipment manufacturer to the distributor. Therefore, it is based upon a pre-existing contract, and therefore the circular was withdrawn and a draft circular was placed, but that draft circular could not see the light of the day since the matter was referred to the law committee. Until now, already 5 years have passed by. 5 years have passed by then, but still the matter is under consideration only. But going by the precedents which we had discussed and the principle on the basis of which the circular was withdrawn, this 10,000 should not be treated as consideration because there is a pre-existing contract. But if we change the scenario, and this 10,000 now there are three parties: A, who is a distributor; TML Motors, who is the original equipment manufacturer; and B, who is a builder developer. A builder developer says that whoever purchases a flat from me can go to A, and A would be offering 15,000 discount to you. And the builder developer says to A that whatever discount you would be offering to my customer, I would be reimbursing to you. Now this 15,000 becomes a part of a consideration for A because it is being paid by any other person, since B, who is a builder developer, falls within the ambit of builder developer. Therefore, 15,000 would be treated as a consideration for A. So these are the three conditions. Venugopal, you had to say something.
Yeah, Arpit, but in situation 3, now would there be a change in a position if the TML Motors pays to the distributor A after the sale he made, vis-a-vis TML Motor has paid to distributor A saying that you pass it on before the supply made by A? Will there be any
You are
change in the
saying that-
position? Yeah,
So you are saying, what I can understand, that there is a pre-existing scheme
correct.
wherein TML has asked A to pay A to give a discount of 15,000 rupees to its customer.
Correct. And for
And
which
once the
they,
sale has
they
been
have already
effected,
paid off the money.
who? A has already paid off the money.
No, TML Motor, even before A made the sale to the customer, TML Motor has passed on that money saying that, okay, you can further give the discount.
Okay.
Will there be
Now,
a situation where A makes a claim to TML Motors after he made the supply?
now this ad hoc amount which has been given by TML Motors to A, whether supposedly an ad hoc amount of 5 lakh rupees has been given by TML Motors to A, and out of that 5 lakh rupees, A gives a discount of 4 lakh rupees. The rest 1 lakh is to be retained by A, or it has to be again repaid to TML Motors?
Not repaid. So, basis the inventory the A has, TML Motor has computed how much A has to get. They have paid off full.
So now, whether or not A gives it to the customer, how much he gives, it is on A to decide.
Correct.
So again, this is something like a price drop incentive, which is given in case of price drop amount, which is given in case of mobile dealer, wherein on the basis of the inventory which is available, the original equipment manufacturer transfers certain amount, and that amount is used by the distributor to reduce its purchase price, and then the further sale price is being made at a reduced price vis-a-vis the existing market price, which was there earlier, but now since the models are old, therefore they are being sold at a reduced price. So in my opinion, it becomes a price drop amount in some manner.
Arpit ji, in this case, situation will be like that this is not pre-existing scheme, or it was decided after the inventory was checked and the things. So it was when the dealer purchased the material, at that time there was no scheme like this, but it was given, discount was given after the checking the inventory of the dealer.
Yes, Guruji, I in my still that I had already understood, but still I would think that this is a amount which is being given to reduce the purchase price, or what we can say that it is a price drop claim to reduce the amount which was given earlier by the distributor to the original equipment manufacturer.
Sir, you are very much right. In this, there will be a problem that suppose the originally the sale was made at 1 lakh rupees by the
Yes.
OEM to the dealer. 1 lakh rupee. Okay. On 1 lakh rupees, 18,000 was the tax. Ultimately, it was sold at 60,000 rupees.
Okay.
With 10,800 as tax. Okay. So in this situation, the discount passed by that OEM to the dealer will not affect the consideration as far as GST is concerned, because it was not pre-existing at the time of the sale. So here in this case, the dealer is getting benefit of that excess ITC. So will that change some situation, sir?
Sir, in my opinion, in the previous session, we had also discussed that first, any amount which is being received, that has to be treated whether it is in the nature of discount or it is in the nature of incentive. So if we say that the amount was decided once the supply was made, and therefore the supplier could not issue a credit note for that, because say the time period has elapsed under section 34. So primarily it becomes in the nature of discount. Now, if the supplier is not able to issue the credit note, that does not ipso facto makes it as an incentive to be treated as a supply being made by the recipient to the supplier. If it is a discount, then it will always remain a discount whether or not the supplier issues a credit note or not. And in my opinion, once there is a underlying supply and the seller is giving a amount to the purchaser to pass it on to the customer, somewhere we have to treat it as the purchase price has been reduced by the seller, although tax might not have been reduced. But after that, there is an independent transaction between the distributor and the customer, wherein the distributor would be treating that his purchase price is reduced, and on the basis of that reduced purchase price, he is deciding the further selling price to the customer.
This is what we are doing, sir. Thank you very much. This is what we are doing. Thank you, sir.
Any other views? See, I am not a speaker. I am only sharing my views, and then the other views can also come.
Yeah, agreed.
I am only a moderator in this session.
Arpit sir?
Yes.
Yeah, sir, in a case where, what if the selling price itself is decided by the OEM, sir? Say, for example, the goods are originally sold at, let's say, 1 lakh rupees. And further, the goods to be sold to the customer by the dealer who has purchased from the OEM. The OEM fixes a price that it has to be sold at 80,000 only. And all the billing also is done by using the software of the OEM. Now, for the dealer, he has purchased it for 1 lakh. And according to the OEM fixes the inventory price and it is sold at 80,000 rupees. And further, there's a 30,000 rupees credit note which is given by OEM to the dealer, wherein dealer gets a margin of 10,000 rupees. In a case where the selling price also is fixed by the OEM, there is no independent fixation of sale price by the dealer. What would be, will there be any change in the scenario, sir?
Yeah, how I see it, does the revenue say that 80,000 is not the correct price of that vehicle? Does the revenue challenges that 80,000 is not the correct price?
Yes, sir. The revenue says 80,000 is collected from the customer and 30,000 from the OEM, because the selling price was fixed by the OEM.
Independently, whether the market value of those goods is 80,000 or 1,10,000 rupees.
Sir, independently it is
30,000 is being received from the, forget it that 30,000 is being received from the seller.
Okay.
Whether the correct market price is 80,000 or 1,10,000 rupees, in the, supposedly I am going to someone and he is not getting any 30,000 from the dealer, whether he would be selling at 1,10,000 or he would be still be selling at 80,000 rupees.
So now, in a case where the market price may fluctuate on a daily basis, sir, and if you are unable to find out the actual market price, it is basically the OEM's goods and he fixes the selling price. Yes. So how do we find out the market price, sir? Whatever is the price fixed by the OEM?
So that's an alternative argument. What I had discussed earlier still remains a primary argument, that it is a pre-existing sale contract between a purchaser, OEM and the distributor. The alternative is that if the revenue is not challenging the selling price of 80,000, so it is so that the final selling price to the customer irrespective what happens between the OEM and the distributor is 80,000 rupees, and the government is entitled for a revenue of 80,000 when the goods are being sold by the distributor to the customer. So even if the OEM has sold me the goods at 1 lakh rupees, what has happened that 10,000 has been received by the government on the first transaction, and since the actual market price was only 80,000 rupees, they have received the final revenue of 8,000 rupees on a B2C transaction. Reversing the transaction, that if originally the OEM would have sold me at 70,000 rupees, that is 1 lakh minus 30,000 rupees, the recipient state in a B2B transaction would have received 7,000 rupees, and the consumer state still would have received 8,000, because my ultimate selling price is 80,000 in both the transactions. So even if in the first transaction there is a transaction of 1 lakh rupees and 30,000 has been received by the purchaser on a non-tax credit note, or in the second scenario wherein the initial price is 70,000 and the last selling price is 80,000, in both the case, the ultimate revenue to the state in a B2C transaction remains the same, unless until the revenue challenges that the actual price is 1,10,000 rupees, merely because the distributor has received 30,000 by way of reimbursement of the earlier purchase price. It does not make it 1,10,000 rupees. Let's take an example. That I had purchased goods of 50,000 rupees from A. Now, A gives me 40,000 rupees as a credit note. Can the revenue say that the selling price is 90,000 rupees? Because still the inherent value of that goods is 60,000 rupees, say in case of a fair market transaction. So 50,000 is a purchase, is a transaction value between OEM and me. And out of that 50,000, 40,000 is reimbursed back to me. So my effective price is 10,000 rupees. But merely because I have received 40,000 rupees, the actual transaction value between me and my customer cannot become 90,000 rupees. This is my understanding of the second alternative argument, that whatever might be the purchase price between me and OEM, it is, if the revenue is not challenging the final selling price between me and my customer, they cannot straight away add back whatever has been received by me as a reimbursement of the purchase price.
Fine, sir. Got it, sir. So basically, sir, now whether the selling price is fixed by the OEM or the selling price is fixed by the
Yes.
dealer, it anyway does not change the answer.
It anyway does not change this. In my opinion, this is my opinion.
Okay, sir. Thank you.
Will fiat case apply here?
Huh?
Fiat case, will it apply?
Fiat case.
Yeah.
See, in case of fiat case, that is a normal price. See, if we go through section 15, subsection 1, going beyond the transaction price, they have to satisfy two conditions. One, buyer and seller are not related parties, and second, price is the sole consideration. Now, again, coming back to the scope of consideration, it has to be paid either by the recipient or any other party. Now, if my original purchaser from whom I had purchased the goods, if he is not not falling within the ambit of any other party, again that 40,000 would not be treated as a consideration, and therefore whatever I have paid to my purchaser, whatever I have paid to my seller, and whatever I have received from my customer, that is the sole consideration. Department cannot say that price is not the sole consideration, and once they are not able to challenge it, they cannot go beyond the price which has been stated by me on the invoice.
Sir,
Again,
sorry to interrupt here. There was this, maybe this point may be relevant, in maybe interpreting the law. Renuka Murali here from Chennai. In erstwhile VAT, 30 and VAT, we had this, whenever there is a price difference, specifically in products where it's controlled by the market price. You can give the example of cement, where the manufacturer sells the cement bag, say at 250 rupees per bag, And normally the dealer will further sell to the final consumer at say 260 rupees. Such being the situation, sometimes the manufacturer will request the dealer to reduce the price, say 248 rupees per bag. In such situation where the selling price is less than the purchase price, the difference will be compensated by the manufacturer depending upon the market situation. There is a specific provision, there was a specific provision in TN VAT. If I remember rightly, it's section 19, subsection 15 of the TN VAT Act specifically says for the price compensation received, input tax has to be reversed on TN VAT.
A very valid point, because same situation was there in Rajasthan also, wherein prior to 9th March 2011, there was a specific ruling by the tribunal that since there is no specific provision for reversal of ITC in case of a reduced selling price due to amount being received from OEM. So no ITC can be asked to be reversed. But after 9th March 2011, similar to what there was in TN VAT Act, a provision was inserted and the constitutional validity of that provision was upheld by Rajasthan High Court. So in absence of similar provision in GST, the department cannot ask me to reverse the ITC on discount, and once it is a discount, it cannot be simultaneously be treated as a consideration if the supplier does not reduces a tax liability and issues me a credit note with tax component.
Agreed, sir. Thank you.
For me, the entire scope of this discount revolves around the definition of consideration, how the term any other person has to be interpreted, vis-a-vis the decision of Honorable Apex Court that we had discussed, wherein they had discussed the relationship between a seller and a purchaser, and how the amount, the nature of the amount which is being reimbursed by the original equipment manufacturer to the purchaser has to be seen, vis-a-vis impact of quantification, that how quantification is being made is irrelevant to decide the nature of the amount being paid. Should we move ahead to situation 4?
Yes, sir.
Okay. So now comes TML Motors has started off an exchange bonus scheme, whereby any person having an old car which he sells to the dealer in exchange of the new car, he will be provided an additional discount of rupees 15,000 rupees. Now this is situation 4, wherein there is a separate scheme being offered to the purchasers on satisfaction of a condition, where therein if the purchaser offers his old car, then he would be given an additional discount of 15,000, and that 15,000 discount is being given by the dealer to the consumer, and in turn it is being reimbursed or being repaid by the original equipment manufacturer to the distributor. Now coming to the there is one one thing I would like to share. Now this is the view of the board. I am sharing the agenda. In this regard, it is proposed to clarify that if a post-sale discount in the form of credit note is passed on compensating the dealer for undertaking an advertisement campaign, free gifts along with the principal supply, exchange bonus, and the like activities on the direction of the principal supplier where the dealer may or may not have contributed, the same would be treated the same would be treated as a consideration for the promotional activities referred to as business auxiliary service in service tax regime provided by the dealer to the principal supplier and chargeable to tax separately, and the principal supplier would be eligible to avail the ITC on the same. So what they have treated, I'm not saying that this is correct, but the version of the revenue is that when the dealer is offering an exchange bonus to the customer, this is a sales promotion activity which is being carried out by the dealer on behalf of the original equipment manufacturer. Therefore, whatever he is receiving in from the original equipment manufacturer, for that he has to raise an invoice to the original equipment manufacturer, treating it as a sales promotion activity. So now coming to situation 4, when I have discussed the view of the board which is coming from the agenda. Now, in my opinion, if we see that this amount is being offered again by the principal original equipment manufacturer to the distributor, the quantification has changed. In case of situation 3 or in situation 4, the only difference is that in situation 3, the purchaser, the customer who was purchasing the vehicle, was entitled to a flat 15,000 discount irrespective of any other condition, just because he was purchasing the car. That was the only prevailing condition, that if he purchases a car, A would be offering a 15,000 discount, and that 15,000, out of that 15,000, 10,000 would be reimbursed by the original equipment manufacturer to A. Now in situation 4, what has changed? Additional condition has been put that not only you have to purchase the car, but you have to give an old vehicle in addition to the you have to give an old vehicle for being eligible for that 15,000 rupees. And if you meet the condition that you give an old vehicle, we will give you a discount of 15,000 rupees, and that 15,000 would be reimbursed by the original equipment manufacturer to A. In my opinion, this is only an additional condition which has been put. Still, the intent is that the amount is being reimbursed by the original equipment manufacturer to the distributor. However, the contrary view can be that this 15,000 is being given as an incentive for a separate activity being carried on, because the inherent value of the new car has not been reduced, but this is an additional amount which is being given for the old car which was there. And since the dealer is carrying out a sales promotion activity of receiving an old car and then selling a new car, therefore this amount should be treated as a sales promotion sales promotion activity being carried out by A for the original equipment manufacturer. These are the two contrary views. In my opinion, the first view still holds good, that this is a discount being passed on by the original equipment manufacturer to A. Only the quantification has changed, but the identity of the amount remains the same. Yes, Venugopalji.
Arpit Bhai, I agree with your view. I am actually again rethinking on the 15(2)(e) by recipient by a third party. When a transaction is between the dealer and end customer, will the manufacturer, the TML, will not be called as third party?
Again, this was precisely which was discussed in this agenda also, and not only going by this agenda, but going by the decisions which we had discussed in the past session. Since there is a pre-existing contract of sale between an OEM and a distributor, and it will not be expected that since the exchange bonus scheme is being given, therefore the dealer would be running running more for selling the vehicles. Ultimately, what he is doing by giving an exchange bonus scheme is selling his own vehicle. He is not carrying out any activity, sales motion activity for the original equipment manufacturer. And since he is not carrying out any separate activity, therefore he would not be falling within the ambit of any other person. Take an example that if the dealer asked me to carry out a 2-day sales promotion activity at a prominent place, say a mall, and he asked me that whatever expenditure would be there, I would be reimbursing, sending me giving you a reimbursement. In that case, there is a separate activity which has no connection with the underlying contract of a purchase and a sale. Therefore, that can be treated as a sales promotion activity. But this activity of exchange bonus, which has been given in the merely the quantification has changed, but the principal transaction and the identity of the amount still remains in the form of discount. In my opinion, the OEM cannot be treated as any other person, because amount which is being passed by the OEM to the distributor is just because there was a pre-existing contract of a purchase and sale between the OEM and the distributor.
Okay, but between the distributor and the end customer, this exchange would be added as a consideration for the transaction?
Yes, definitely. But see, if the condition is that if the customer gives you an old car, he would be allowed a discount of say 15,000 rupees.
15,000. Correct.
He would be allowed a 15,000 rupees. Now these are two different transactions.
Correct.
One is the selling of the new car by the distributor to the customer, and second is giving the old car by the customer to the distributor. So these are two different transactions, and since these are two different transactions, so merely because the second transaction of an old car is happening, that does not reduces the value of the new car, and therefore any discount which is being given in as an exchange bonus, it should be given post the tax has been charged.
Yeah. So here, will there be a situational change if the end customer who is giving the old car, now as a distributor, my price of the car is remaining same. The question is whether as a distributor, am I buying the old car from the end customer and giving it further sale to the dealer, Tata or the TML? Or a situation where the old car has been taken and I issue a receipt that this is directly taken by TML and not the dealer. And the dealer is passing on that 15,000 rupees to me. Will the paperwork make any change if the car is taken in the name of dealer and given to TML, or car directly taken in the name of TML? So the transaction between the dealer and the TML, will there be any change because of this change in the paperwork?
See, what actually happens is when the old car is given, the dealer retains the old car and he further sells it to another customer. So this is what is happening in commonly in the dealership. Now the question is that what you have raised is that the dealer takes the old car in his own name and then transfers it to the Tata Motors Limited. This is the first situation.
Correct.
So in that case, if the car has been taken in the name of dealership and then it is being transferred to the Tata Motors Limited, that is, I guess you are saying that the car is being sold by the dealer to TML. That is what you are saying in the first situation?
Correct.
So in that case, it is just like a third party transaction and it will not make a difference. But in the second scenario, wherein the car is being directly transferred to TML.
Correct.
Car is being directly transferred to TML and that 15,000 is being given to the TML Motors. Now in
Given
that
by
case,
TML to the dealer.
TML to distributor. In
Correct.
that case, see, I would again go back to the situation and then give a final view. But in that case, TML becomes a third party in this transaction for A, because for what 15,000 is being given to dealership, the 15,000 is being given to dealership for acting as an intermediary for taking the car from the customer and giving it to TML in their name directly without taking the ownership in its own name. So in that case, in my opinion, it becomes a separate activity, and for that 15,000 invoice for 15,000 would have to be raised by the dealership to TML Motors.
Would it be that way it should be considered, or should we consider is this the supply to end customer consideration partly received from the TML and apply the rate of the car?
No, this is a separate activity, because what they have said that you sell your car to the customer, and if he gives me his old car, give it to us and transfer the 15,000 to the give a discount, give an amount of 15,000, whether A is giving 15,000 to the customer, or he has a prerogative that whatever he feels fit, he can give it to the customer.
I think we will keep this 15,000 only, and so A is giving the car for a value less by 15,000 rupees.
So whether TML would be asking that you have to produce a receipt from A that you have given a 15,000 to him,
Since
because
TML
if
will be in possession of the car, and I think it is the TML internal records wherein they will pay 15,000, take the possession of the car and do whatever they want to do with the car.
if TML insists upon that a 15,000 receipt has to be taken from the customer and then produced to us, and then we will only be giving 15,000, in that case, A becomes a pure agent. But if TML would not be insisting on that 15,000 receipt from A, and they straight away, once they receive the old car, they straight away give 15,000 to A, irrespective whether he passes on it or not, then in that case, that would be a consideration, and for that 15,000 invoice has to be raised by A in favor of TML.
Got it. So the one point I want to highlight is GST is completely form over substance. Now in all the transactions, substance is same, but
Yes.
each time the documentation form is changing, the taxation and the views are changing.
Taxation views are changing. See, there is one very interesting thing, question which I always take and put before all the members to give their views, because this is related to discount. Now, what is happening commonly, that say I go to a store of go to a ready-made garment store. Say Park Avenue. Now therein a scheme is there that if I purchase goods of 10,000 rupees, I would be getting points of say 500 rupees. I would be getting 500 points. Every point is of 1 rupee. I go there and purchase goods worth 10,000 rupees, I get 500. Secondly, I again go to the Park Avenue shop, and at that time also there is a scheme that if you purchase goods worth 10,000 rupees, you will be getting points, 500 points. I again purchase goods of 10,000 rupees, I get points of I get 500 points. Now I have a total of 1,000 points, which I have not redeemed till now. I have not redeemed those points till now. These are in my wallet. The third time I go, I make a purchase of say 5,000 rupees. I encash those 1,000 points. I redeem those 1,000 points, and I get a discount of that 1,000 rupees. The question is, yes, the 15.3a, which I have given here, this is 15.3a. The question is that when I have purchased goods of 5,000 rupees, I have redeemed the point, redeemed points of 1,000 rupees. whether the tax should be charged on the 5,000, entire 5,000, and then 1,000 should be given as a discount, or tax should be charged 5,000 minus 1,000 on the balance 4,000 rupees. Why I am raising this point? Because 15.3a says the value of supply shall not include any discount which is given before or at the time of supply if such discount has been duly recorded in the invoice issued in respect of such supply. So the value of supply shall not include any discount given before or at the time of supply if such a discount has been duly recorded in the invoice issued in respect of such supply. So the discount has to be related to that supply. That's what 15.3a is coming, because if the discount is related to some other supply, then credit note has to be issued. And if the discount, can we treat that 1,000 rupees and redemption to be treated as a discount in respect of that supply, or that 1,000 is a discount in respect of any other supply? And if tax has to be reduced, it has to be reduced to credit note. It cannot be reduced from the invoice by saying 5,000 minus 1,000. Yes, Venugopalji.
RPG, now given that these wallets are now monitored by RBI, can we not call this as money equivalent and not a discount? It is a consideration discharged in other way.
Yes, the wherein I am saying that tax has to be charged at 5,000 rupees. The ultimate conclusion is that this is a money which has been held and it is not in the form of discount, and it is being used to discharge the consideration of a new supply. Or the alternative is that since the alternative view is that since this is a supplier specific points, these are not points which can be redeemed at any other store. This is an internal documentation which is being kept by the supplier. So therefore, this discount, unless until I have redeemed it, these are not a discount for any other supply. And once I redeem those points, then only it becomes a discount. And since I have redeemed it in respect of a particular supply, it becomes a discount for that supply. Because if we go
Even
to,
though it is only specific to, let's say, Park and Venue, Louis Philippe, still it is like conditional receipt.
Huh?
I'm saying still it's a conditional currency which can be used in a specific location. I would still feel it would take the color of the currency and consideration is paid.
But if you go to any of the stores, they are deducting it as a discount. This is the invoice which I've seen. Now I would ask views from the member that what they have, what are their views in this case.
Arpitji, I am Mahesh here. Even I agree with Venuji. Reason being, this amount certainly equivalent to the money consideration. And second thing, as you rightly said, that it is applicable or the benefit is given to a particular store owner or maybe the chain of the store. You cannot encash it to some other store. At the same time, it has a time limit that within that particular time limit, you need to avail it. Otherwise, it will be expired. So once it is availed, it has a specific time limit. We can also, these are also equivalent to our credit card points. You can convert it in cash.
So your view is also that the tax should be charged on 5,000 rupees and then 1,000 should be allowed as a discount.
Yes.
Maheshji has a view. Yes, Maheshji.
Sir, yeah, that's what I said. That
Okay.
the tax should be charged on 5,000 and the 1,000 should be deducted later on as a consideration in terms of money.
So,
Sir,
yes.
this is Ramji here. The idea of giving a point-based system or discount is that the customer has a choice to set it off at any point of time. And when he does that, it becomes a discount which should be deducted prior to the GST. So in my view, that 5,000 minus 1,000 should be the value on which the tax should be, charged.
So you are saying that since the encashment is being done at a
Yeah.
particular supply, it becomes a discount for that supply.
Yes, yes. And there is a option given to the customer, and customer exercises that option within the condition, the time limit laid down. It can also be transferred to any other store, because it is particularly to that store only. So whenever he goes to that store only, he is entitled for that discount. So I think it satisfies that condition.
Even
Very
then,
fine,
it
sir.
should be a consideration and not discount in my view.
RPG, in this case, my view is that earlier 2 times when you purchased that 10,000 rupees and you got 500 rupees as a points, I think those 500 should be taken as a credit notes. It should be taken as a credit note, and it should be like that those credit notes are being adjusted in the new sale of 5,000 rupees. So it will be akin to credit notes, and credit notes are basically deducted from the return GSTR 1 where you show that supply. So I think that will also be, ultimately it is a discount. Ultimately, it is a total discount on rupees that 20,000 rupees, which is
Sir, if
being.
you say credit note, it will not be a discount because this credit note is used as a consideration adjustment for the next payment. So I have to get 10 rupees. In the next bill, I am paying 10 rupees less.
Sir, that's why those credit notes are being utilized as a payment for that. Those
But these are a
deductions.
financial credit note, no, sir?
That's it.
Since it's a financial credit note, so in the next payment, we will be using this as a money equivalent. Hence, it is not a discount and it is to be treated as a full consideration.
Venuji,
If the supplier, when I encash those points, issues me a tax credit note, then what happens? See what you are saying and what Gurjit is saying. There are two different things. You are saying that it becomes a consideration. Therefore, once it is a consideration, no tax credit note can be issued. And what is the other view? That since it is a discount and since no tax credit note is being issued, therefore, if the supplier issues me a tax credit note, he can set off the tax liability. He cannot set off the tax liability on invoice, but he can set off it by issuance of a credit note.
Sir, my point is that this amount is a pre-existing agreement. When you purchase those 10,000 rupees 2 times, it was a pre-existing agreement that you will get this 500 points or 500 rupees, whatsoever it may be. So that is because contract entered prior to the sale, it was admitted. That's why it cannot be financial credit note, but it can be GST credit note, 34 section.
Yes.
I think it's like
so 15(3) should be applicable. In this case, discount cannot be given on invoice, but it can be given through a credit note.
Yes. I think I will take those 500 rupees as a credit. In case in future the time limit is expired and we are not able to use that credit note, ultimately that credit note will never come into the existence, because there will no, the seller will not be having any deduction from his next GST 1, because there will be no credit notes. That is my point, sir.
So there becomes 3 situations. One, Venugopalji is saying that this is a consideration, 1,000 rupees. So no credit note can be issued. If I am correct, this is what you are saying, Venuji?
Yes, sir. Yes, sir.
The second is that it can be deducted from invoice because it is a discount in relation to that supply. The third is, since there is a pre-existing agreement, but when the encashment is done, it is not in respect of that supply because they have been earned on a particular supply already. Therefore, if at all tax has to be reduced, it has to be reduced by the credit note under 15(3)(b). So, what are the views from the members? Because we are running out of time. Only 10 minutes I have left. I left for today's session. I
Can
would
we,
be
sir,
going with. Yes, sir.
sir, can we take it as a color of actionable claim, sir? Because till those points are redeemed by that company, can we take it that it is, if it is not taking the color of money, can we say that this reward points, whatever is given by the company, can be taken as a actionable claim till that is redeemed by that company actually? So can we
But
look
there
at?
is but there is a pre-existing agreement wherein I am eligible for that amount. And since there is a pre-existing agreement, so by treating it as actionable claim, we are taking it outside the purview of consideration, outside the purview of supply. But
Okay.
can it still hold the color of discount in 15.3b or
Okay.
15.3a?
Okay, so like if those points are redeemed, then it can take the color of the discount.
Discount,
But if the
yes.
points are not redeemed, I think we can still look whether it fit into that definition of actionable claim and
If
to
the
that
points are
extent.
not redeemed, then they have their own life. They expire. Now the
That
question is
is,
when they are redeemed,
Yeah.
whether redemption itself would be treated in link of that particular supply, or or would be treated as that there was a pre-existing agreement on the previous supplies and they have been earned for those previous supplies. And since they were earned for those previous supplies, they no longer remain relevant for the current supply. And if at all they are to be allowed as a deduction by way of tax, then it has to be through a credit note.
Okay. Okay. Got it.
so I think what the company should do, company should record those points as a credit notes in their books, and those credit notes should be entered into GS1 only when they are redeemed. Then it will be a perfect situation for them. This is my view, sir.
Views of other members?
Sir, what if I mean, instead of crediting that points in my wallet, if he gives me a voucher with respect to that points, will the situation change?
That this is the voucher which you can use. Now again, that voucher is being given by the company,
Right.
and they are asking that you can exercise these vouchers at any point of time.
Right.
So again, we will have to see that the ultimate use. Yes, Venuji, you have raised your hand.
No, I just want to remind 10 बज गई तो थोड़ा
हाँ.
घंटा बजाने के लिए फोन किया.
Acha, my office clock is 5 minutes behind, so I was seeing at 9:55. So
Okay.
another color has been given to this situation, that what happens if the voucher is there. Now, can voucher being issued be treated as treated as a separate transaction and exercise of that voucher? Since it is finalized that they would be exercised on a particular discount, their time of supply would be at the time of issuance of voucher, or since it is not finalized, whenever they are used, their taxability would be determined by those. Now, this is another color, that what happens if the voucher has been given, whether the original transaction remains as it is for 5,000 rupees, and issuance of voucher and exercise of that voucher on the next transaction would be treated as a separate supply. This is a valid point. We can discuss it in the next SMS. Now there are 4 scenarios to conclude, and then we would be having a next session on that. Points being points of 1,000 rupees, whether they are consideration, whether they can be deducted by way of 15.3a, whether they can be deducted by way of 15.3b, or if at all a voucher is issued, can that exercise of voucher in subsequent transaction be treated as a separate supply, and applying the time of supply provisions? That using that 5 and 1,000 rupees, separate tax would be applicable by virtue of voucher being exercised for making the payment. So these are 4 transactions which we can see, and all the participants who are there can ponder upon it and come with a view in the next session. And thank you very much for all of you for attending this session, and we hope to continue this in the next part also.
So
Yes,
carry
Vinay.
the confusion for one more week.
Definitely.
Okay. Thank you, Arpit bhai, and thank you everyone. And as usual, please do join every Saturday. This recorded session would be uploaded tomorrow. Thank you all. Bye. Good day.